Hey folks, so just wanted to make a video on C3AI. In the after hours, they're down about $7-ish bucks. So, this is down quite a bit. So, if we're just looking at the chart on the day chart, we do have this massive gap that formed right there. So we're essentially just pulling right back down to fill this gap is what price action is doing in the after hours. So let's go ahead, let's take a look at the actual earnings report. So C3AI announces fiscal fourth quarter and full year 2023 financial results. So let's just go ahead and look at the full year results. So for revenue, that's 266.8 million, which is a 5.6% increase compared to fiscal year 2022. If we're looking at gross profits, that's gross profit for the fiscal year is 180.5 million, which is representing 68% gross margin. And if we're looking at net loss per share, this is negative $2.45 on a GAAP metric. On a non-GAAP basis, this is negative 42 cents. So, they also gave us some guidance here. So if we're looking at the guidance right here, they give us the full year for 2024. So here they're saying non-GAAP loss from operations. That's negative 50 to negative 75 cents per share. So that's even more than 2023. So if I just scroll up right here just to show you guys 2023. 2023 was negative 0.42. Now they're saying negative 0.5 to negative 0.75. So yeah, that's not a good thing. Now, what about total revenue? So 295 to 320. We are comparing that to 230.4. So yeah, revenue is expected to increase, but with that, likely more cost. So let's just go ahead and scroll right down to the financial statement. So this right here is for the quarter. This right here is for the year. So if we're just looking at the quarter, we're looking at subscription and professional services. So both of these are rather flat, except right here you can notice that for professional services, this is actually on decline. And this is just a slight increase right here on the subscriptions. And overall, if we're just looking at the full year, the professional services is down quite a bit, and the subscriptions is up quite a bit. So you guys can clearly see that distinction right there. Now, what about cost of revenue? So if we're just looking at cost of revenue, we can see that costs have pretty much doubled from the last quarter right there. And you guys can also see for the full year, it's almost close to double. So it's quite a bit. So overall gross profit, this gross profit number is actually down a little bit. So if we're comparing 2023 to 2022, it's down about 9 million. And if we're comparing just quarter over quarter or quarter to quarter, right here, this is down about, that's down about like 8 million right there. Now, here's the kicker. If we're looking at operating expenses, just take a look at sales and marketing. Sales and marketing surpasses their gross profit. And that's not it. They have other expenses too. So this one line item surpasses their gross profit for the quarter right here, also for the full year. So 183 million for the full year. Their gross profit is 180.45 million. So yeah. And then on top of that, you have R&D, which is 210 million. You have general and admin, which is 77.17 million. So your total operating expenses are about 470.1 million. So this gives us a loss from operations of about 290.5 million right there. So that's not a good thing. I mean, in most companies, you do want to see them go profitable, but you do have to remember that C3AI is kind of in the early stages. So, they're likely have a lot more R&D expense. Now, let's just go ahead. Let's look at net loss. So if we're looking at the net loss, for the full year, that's about $268.839 million, which gives us about 2.45 negative earnings per share. Now, for the quarter, that's about negative 0.58 EPS versus negative 0.55 in the same quarter last year. So, yeah, overall, earnings per share is getting more negative. If we're looking at weighted average shares outstanding, this number is also increasing. So, last year, same quarter, it was about 105.8 million. Now it's 112.7 million. So yeah, that's a pretty big increase, you know. Now let's go ahead, let's take a look at their balance sheet. If you're looking at their balance sheet, total current assets is about 888.8 million. Now, if we're looking at the last year, you know, that was in the billions. That was about 1 billion right there. So current assets is down. If we're looking at total current liabilities, that's about 136 million versus 150 million. So current liabilities is down, but you know, overall, total current assets is down much more. So if we're just looking at this as a ratio, you know, they're in pretty good standing right now. So they could continue to burn cash and still be okay for quite some time. Now let's take a look at stockholders' equity. So this number is going down. This is 929.6 million versus 989.47 million. So equity is going down, and at the same time, shares outstanding is going up. That is like the worst case scenario. You don't really want to see those two things. Now, if I'm scrolling down even more, and I'm showing you the cash flow statement, you know, we're getting the net loss, and then we're basically reconciling it. So we're adding things like depreciation and amortization, non-cash operating lease costs, and right here, take a look at stock-based compensation expense. This is almost double. So this is about $216.5 million right here. In 2022, that was about 113.4 million. So this is very close to being double. So this is why we're seeing our shares outstanding increase. It's because of the stock-based compensation expense. Now, if we scroll down a little bit more, we see net cash used in operating activities. So, you know, this is at a loss right here. So they have a net operating loss for cash. And if we're looking at purchase of property and equipment, this basically gives us negative free cash flow right there. So cash flow is negative. Now, if we're looking at cash and cash equivalents at the beginning of the period, that's about 352.5 million. And at the end of the period, that's 297.39 million. So, you know, things that you need to know about this company is they're operating at a loss right now. And then next year, they're also going to operate at a loss. They even told us, they gave us guidance for that. So me personally, I would say, hey, you know what? Just wait it out. Wait until you see this trend go positive. Because as of now, you know, they're just getting more and more negative. So, you know, you could be an early investor or whatever, but, you know, maybe expect some AI optimism for it to pump, and then maybe it crashes down, comes back to earth. So, obviously, this is a little bit more speculative. So if you are investing in a stock like C3AI, just make sure that your position sizing reflects a speculative investment. So like maybe like a 1%, maybe like 3% at max. But don't go all in on something like this. I literally explained the financial situation to you, and it is not good right now. Maybe in the future, you know, maybe like 5-10 years in the future, this company is doing great. But as of right now, you know, it's not doing great. They're losing more and more money. And yeah, overall, you know, the trend is pretty much cash burn and more cash burn and dilution and more dilution. So I hope you guys enjoyed this video and have a good one.